The Commission on Human Rights and Administrative Justice, SHRAJ, has tasked the Finance Minister Ken Ofori-Atta to, as a matter of urgency, ensure the passage of rules and regulations to avoid breaches in the issuance of bonds and potential conflict of interest situations. This is part of recommendations made after the Commission cleared the Finance Minister of allegations of conflict of interest made against him by NDC youth activist Yao Broja Jemfi. Elton Bobe has more.
On April 25, 2017, Broja Jemfi petitioned SHRAJ to investigate conflict of interest in a recent $2.25 billion bond issued by the government of Ghana through the Ministry of Finance, alleging a number of issues of conflict of interest and a lack of transparency from the bond issuance. According to him, the bonds were not on the issuance calendar and that the transactions seemed to have been shrouded in secrecy. Mr. Jemfi said one single investor, Franklin Templeton Investment Limited, an American and global investment management organization, founded in 1947, purchased 95% of the bond issued. He insisted that a relationship interest existed between the Minister of Finance and Mr. Trevor G. Tregani, who, in a semi-annual report of the Franklin Templeton Investment Limited of December 31, 2016, is one of the board of directors of the organization, who had also been the chairman of the Enterprise Group Limited. The Enterprise Group Limited is a company partially owned by Data Bank Limited, a company in which the finance minister is known to have significant interest. But SHRAJ, after investigation, says those allegations are not substantiated. However, the Commission observed some breaches. It observed that the primary dealers double as the book runners, transaction advisors, and that dual role gave them an undue advantage. It also observed that the respondent, the finance minister, is either a director, former director, or shareholder or beneficial owner of several companies whose objects relate to the securities market sector, raising issues of potential conflict of interest. To ensure transparency and clarity, the Commission directed that the minister ensures that all processes in the issuance of bonds by the Ministry of Finance and the Bank of Ghana are complied with. It also directed that the minister, as a matter of urgency, pass rules or guidelines to regulate the format and the procedure for participation, bidding, and allocation in auctions in relation to the issuance of securities in the domestic market. SHRAJ further charged the minister to take measures in preventing primary dealers who are also book runner transaction advisors from gaining unfair advantage because of their dual rules.
So what's going to be the impact of SHRAJ's findings on fresh investments? Economist Dr. Eric Osei seems to downplay the impact these fears of potential conflict of interest in the issuance of bonds could have on fresh investments.
I think the ruling is quite clear that the minister did not indulge in any conflict of interest. That was the key issue that was sent there. But of course, it found that it breaches some rules and regulations as far as bond issue is concerned. And so, for me, I think it's a learning process. I'm sure that it wasn't an intentional act for the finance ministry or the finance minister to sidestep the rules. Perhaps they took things for granted, and so it's a wake-up call for the ministry to ensure that going forward, those breaches are not repeated.
I know for these institutional investors, they are very, very particular on these kind of things, the laws, crossing the T's, dotting the I's, and all those things. Could this, going forward, have an impact on those high level of interest that we have in our bond from these institutional investors, because they are very, very particular about these things, and the fact that if the minister breaches or can breach some of these laws, then what will happen to our investment going forward if there is even a change in governments and all those things?
Well, I think after that, the ministry had issued some more bonds. I do not think it suffered the same fate as it did the earlier one, the very first one of the minister's reign. And so I think that since it did not repeat itself, the investor confidence is really not going to take it as a big issue. They might take it as a mistake. Just they overlooked certain key, rules or not too important rules and that kind of thing. But going forward, if it's not going to repeat itself, I don't think it's going to really have any negative impact. What we have to guard against is it doesn't repeat itself. And it's also important that there was no issue about conflict of interest. That would have dented any subsequent bond issue, you know. And so now it's good that this issue has been cleared and the right recommendations have been given. And so what we expect the Finance Ministry to do is to comply strictly with these rules and regulations, because as you rightly said, the investor confidence are very key about some of these regulations and rules and others that ensure transparency of the process. It engender credibility of the whole process.
Some perspective from economist Dr. Eric Osei Asibe. Well, gradually we are ending the year. What a year has been for business. A year that saw a new government take over determined to industrialize the economy, but also a year that saw the collapse of 2 indigenous banks. I guess that was the biggest story for business, wasn't it? Well, earlier in the day, we engaged some economists on how government effectively managed the economy. But first, their thoughts on how the UT Capital Bank collapse was handled.
The aftershocks, I think that, and where I agree with Doc totally, is that the aftershocks have been very much minimized by the way the Bank of Ghana handled the how do you say, collapse of those 2 banks. It's been done in such a way, it was so smooth that the aftershocks are very minimal. There's virtually been no lack of confidence. I mean, what did happen then was people were asking, so is my bank safe, kind of thing. I personally benefited from that because I did a special publication called How Safe is Your Bank, and made a lot of money out of that. But anyway, the fact was that the Bank of Ghana smartly explained what the situation was. I remember I was in a studio, I was in your studio in the radio side when the Raymond Amanfo,
the former head of bank,
explained the situation concerning the other banks who were below 10% minimum capital and everything. And I think from there, when that thing went into the public domain, everybody now relaxed. And right now, there's when you talk about the general confidence in the banking sector among the banking public, it is no lower than what it was before those banks had their licenses. So I think the aftershocks have been handled very, very smoothly. And with the recapitalization coming,
we'll be doing that. So let's try and rate the BOG on the decision that they took in trying to deal with these 2 banks. And maybe let's say, I'll give them a gold star. Now we're on TV, so you can see a gold star, meaning that if indeed it was to contain a contagion issue, then for me it's a gold star to the Bank of Ghana and to the governor of the Bank of Ghana, Dr. Ernest Addison. It looks like we are in sync on this one and not Bank giving anybody a B-, which is already seeing some passion. Doc, I don't know how you rate this government in terms of how they've implemented those policies in the 2017 budget.
I will go. I think I will rate them positive.
Okay, positive. And he's showing, for those listeners on radio, he's showing a card green with an arrow pointing up, saying that the
for the policies themselves, I will put this. However, for the implementation of the policies, I will say this because of certain financial constraints, which have affected how well those policies on paper have translated into the economy.
Well, fairly good rating for managers of the economy, but how about the people on the streets? What is the assessment of the economy this year and the expectations for the next year? Charles Aite was on the ground with our visibility board.
As you can see from the board behind me, several concerns raised by Ghanaians. They've absolutely not been, very much enthused by the performance of government in terms of the economy. The very first point that, you could see on the board is the low utility tariffs. They are calling for this one ahead of 2018. And also it's a matter of the stable power generation, which of course has been an issue in the past few months. The energy minister has even laid claim to that. And BOG to push more money into the economy. economy. That's one particular view from a concerned Ghanaian in that very regard. And so many ones. We could have that of unemployment. Of course, we cannot have this discussion without discussing the issue of unemployment. But I do have one of such concerned Ghanaians. He's been sharing with me some of his concerns and, of course, what he expects from the economy in 2018. First of all, many thanks for being here on Joy Business with us. Many thanks. What has been your assessment of the entire economy this year around? Was it good? Was it bad? Was it ugly?
To my expectation, it has been good. A lot could have happened to improve it, but generally it's been a good year for the economy of Ghana now as it stands.
Okay, but we cannot end this discussion without getting to find out from you your key expectations from government, from the economy. What are they?
Well, coming year 2018, I want to see the prices of oil come down. I mean, generally everything is dependent on fuel now. If it goes high, it affects the layman right on the street. So if it comes down, things will lower a little bit and people will be more convenient doing transactions and whole kind of stuff. So the prices of fuel are expected to come down so that the economy will be free. And then secondly also, interest rates, I expect them to come down.
All right, many thanks. So that was one of the concerned, citizens there expressing to us what they expect from the economy next year. But of course, other key points that have been listed on the board, right, the reduction in ministerial appointments and that of incentives for farmers. So all these kind of concerns raise the issue of the performance of governments in relation to the economy, and of course the key concerns by Ghanaians moving on to 2018. We shall be following these things closely and running them by the various ministers and sector agencies, especially in 2018, as we kick off.
So, yes, there were ups and downs, and all year round we brought you the story. Some of the reporters who made sure you were updated have been looking back at the 2017 business year. Here are my colleagues Charles Aite, Sheila Tamaklo, and Eben Sabute.
This year, we have seen government, increase its urge to attract so many foreign investors into the country. We have been engaging closely with the GIPC, that is the Ghana Investment Promotion Center, through its chief executive, Yofi Grant, to explore, the various ways by which government is making this dream a reality. And personally, as a business journalist, I've seen it through it all. The, Ghana Investment Summit, which attracted close to about 30 investors, foreign investors into the country. And all these are aimed, to increase the foreign direct investment from $2.5 billion, which is currently the situation, to in excess of $10 billion next year. So next year, 2018, we're going to be looking at how government is streamlining this very initiative, the various regulations that are going to be put in place to make sure that investors are really, really impacting positively on the economy. And we shall be engaging more with the GIPC to find out how these things work.
This year was also a very good year for the aviation sector. I mean, first of all, we saw a government name an aviation ministry solely on its own. I mean, this time it was separated from the transport ministry. So a lot of work went into this particular sector. Now, some of the highlights of this particular sector was the fact that we saw Ghana actually host the first ever African air show, and it was a successful one. We saw so many exhibitors come around. Now, another thing that we've been grappling with was the national carrier. And for the first time, well, we've had the minister name 3 airlines that they're looking to partner to actually create this. And finally, we also see that the sector has also had a few issues, and as we can see currently, we have just one indigenous carrier, which is Africa World Airline. But we are hoping that things will get better, and according to the Ghana Civil Aviation Authority, they are working to get some 5 new airlines on board.
This year has actually been a very good year for the banking sector, I would think so, because we have a government who thinks the sector needs to be strengthened. And I mean, with the move, the rate at which the Bank of Ghana moved in to close down 2 banks, that is Capital Bank and UT Bank, I mean, you could see that they really want to protect depositors' fund. And for me, I think it's a good move, even though it hasn't been, I mean, well, shareholders of these 2 banks couldn't receive the news with the kind of excitement that it deserves. But for me, I mean, as an industry watcher or as a journalist, as a business journalist, I think it was a prudent move.
And those were some of Joy Business reporters who brought you the stories all year round. We want to turn focus to illegal mining, and the Minerals Commission is engaging small-scale miners on ways to address illegal operations ahead of the anticipated lifting of ban on small-scale mining. This engagement is aimed at streamlining and sanitizing the system to reduce the distraction to the environment. Board Chairman Samson Kwekubuafo spoke to Lab Business after a meeting with the Ghana Association of Small-Scale Miners in Kumasi.
The meeting between the board of the Minerals Commission and the small-scale miners seeks to ascertain at first hand challenges miners face and how to resolve them. Board Chairman S.K. Boafo encourages the miners to form larger mining entities in order to reap the benefits of large-scale mining.
Nobody's against mining, but we need to do the proper thing. So definitely the minister has made some statement that hopefully January, this few days from now, we will be lifted. And that's why we want to come and meet with them, so that how we can have the modalities going forward. So that it's the bad nuts that affected good people. So the way forward is that we need to arrest it once and for all, so that we will continue to do the thing. And then secondly, foreigners are doing the big money. It is my hope during the tenure of the pop that we need some Ghanaians who also go into the lifestyle. That will help us boost the business. And Ghana Beyond 8, that our president is speaking, and the Minister of Finance, will also be able to get all we need from the mining industry if it's properly organized. I'm telling you, there will be no need for us to go and borrow at all.
Leadership of the small-scale miners is excited about the engagement and the group operation proposals. Chairman Collins Osei Kusi wants a government to strengthen supervisory institutions to ensure regulations are complied with.
What we are expecting is that they have promised that by the end of January they are going to allow us to go and work. So what we are expecting is that we want the government to resource the institution that monitor the small-scale mining activities, like the EPA and the Minerals Commission, because they monitor the activities of the small-scale miners, so that if anyone who doesn't go by the law, that person could be chased out or be punished. Because if they don't monitor, everybody will do whatever he or she likes. And we have also asked everybody to work according to the regulations. And we have task force. Our task force is there to monitor our own activities. So anyone who doesn't do the right thing to be chased out by our task force, we ourselves will arrest you. And we have planned that as time goes on, we the small-scale miners will come together to form to get a large scale. And this is what we will put our resources together to get a large scale, to move to large scale, or to get large scale, which is being owned by Ghanaians.
Prince Apia reporting.
All right, in studio with us tonight is Bertha Atibiga for a review of the stock market in 2017. Great to have you in studio, Bertha Atibiga. How has it been like? Earlier we got economists assessing the economy, saying that it was good. How was it for the stock market?
Okay, thank you very much. Let me say the stock market did extremely well. Why am I saying extremely well? If you compare the year-to-date returns to the past 2 years, let me just take the past 2 years for instance, the stock market was returning negative returns, but as of close of today, it had 52.53% as average return for the entire market, and then 49.21% for the financial sector or the financial stock index on the Ghana Stock Exchange. And this should tell you that we're moving all the way from negative 15 or negative 11 to about this percentage, going above 50%, and that was actually our expectation, to go above 50% average returns by close of this year. And today happens to be the last working day of the year, and by close of today we had 52.53% as average returns.
You were telling me earlier it performed better compared to 3 years ago.
Yes.
What pushed it? I mean, what made it perform better?
Well, the major thing that actually, let me first of all say that the market is a cycle, and it doesn't remain at the low. It doesn't remain bearish forever. It's always at a point in time it becomes bullish. But one major factor that influenced this performance is the fact that interest rates dropped this year. Interest rates were on the low side. Right from last quarter 2016 till now, we've seen interest rates go down drastically. And you know, one thing investors always look out for is higher returns. And if interest rates are going down, then they tend to look for the alternative, which was the equity market. And we also know that historical information and data shows that the current government focuses more on capital markets. That's long-term investments as compared to the short-term investments. So these are, I would say, the major factors that influenced investors' confidence in the stock market, and we saw a lot of trades going on, and that also, the market was also very bullish, and we saw investors investing more, and the returns also went up. Aside these things, other factors we can say are the financials of some of the listed equities on the stock market, which actually influenced investors' decision as to whether they should invest in them or not. Some equities were not performing extremely well. They did very well, but not extremely, but you still had investors investing in them. So some were as a result of investor sentiment, which actually influenced, or let's say kind of convinced them that, okay, so this equity is doing well at this particular point in time. And it's like almost all investors want to invest in that particular equity. So the demand for those equities actually go up. And when the demand for these equities go up, then we tend to see the prices of the equities also going up as well.
Okay, and let's turn to the currencies, because the cedi was, should I say, going up and down, was unstable at times, and there were some fears. How did the currency perform on the whole?
Well, generally, the cedi, if you compare it to last year, didn't do well as compared when you compare it, especially to last year. Last year, we recorded a year-to-date depreciation less than 10%, but this year we're doing 10.69% average return. That's 2017. And if you that last year was 6.30%. And then 2 years ago was about 13.65%. So this year was not very good as compared to last year, especially to the euro and the pound. And this is a holistic year-to-date performance. That's against the pound, the euro, and the pound, euro, and dollar. Now, if you look at the performance of the cedi against the euro and then the pound, you realize that the cedi lost so much to these major currencies. And with the euro, we didn't, like I mentioned here some time back, we don't have much control. It was due to external factors, just as the Brexit that we had this year and all that. So we didn't have much control over that, and the cedi lost so much against these currencies. So we saw the holistic year-to-date performance of the cedi actually go above 10%. But if you look at the dollar, it's about 5.09%.
And just a quick one, how do you project the stocks to perform in 2018, good or bad?
Good.
All right, thanks very much indeed, Bertha, we got there with an update on the stock market for 2017. It's been a good performance, she says, compared to, let's say, 3 years ago. Thanks very much indeed. Now, time for our interview of the day. It's with the CEO of GIPC, Yofi Grant, looking ahead to 2018, speaking about investment opportunities.
Interview of the day.
There are quite a number of projects going on in the different agencies. Some of them we don't even hear about. So we suspect that we probably might have gone past the 5 billion already, but it's just that we haven't been able to record some of these investors, especially those who are repeat investors, increasing their capital and bringing more money to expand their operations.
Okay. So moving forward, for investors, which areas should they look at? Should they look out for in the next year? If I'm an investor,
yes, I think infrastructure is still interesting. Okay. Agriculture and agro-process is definitely very interesting. Tourism, definitely interesting. And ICT, clear opportunity. Those are some of the immediate opportunities that are there. Now, of course, energy is still will always be key, but infrastructure and agro-processing are attractive. I mean, people think that agriculture cannot be a business. It's far from true. You can make serious money from agriculture, and those who have done it in other countries are there. There are quite a number of firms already have passed through in the past 3 or 4 weeks looking at agriculture on a massive scale. There are foreign companies who are even coming here to look at cocoa. They want to do large plantations and process from bean to bar, as they say, from the cocoa bean to the chocolate bar and other parts of cocoa. So I think that we are in a good place. What we would keep encouraging investors is seek local partnership.
Interview of the day.
And this is our last show for the year. For me and the production team, Happy New Year. See you in 2018.